Weird because it's insinuating that this spike is going to happen out of the same side as the original one, not like what it's been showing usually. Yeah.
low on Black Bullet, which you're on, didn't hit the other low, whereas on Oanda it did create a new low.
Yeah, let's take a look. I don't know what to type in to get Oanda. What do you type in to get Oanda? I gotta go to the list?
I know I just always had it up in here. My two choices, either Pepperstone or Oanda.
Yeah.
It just says NAS 100 USD. New entry for Ninja
Hmm?
on this one that went down there. Did you need a new entry for Ninja to hit the other low, or
No, no.
okay?
What did you? Did it come down for you?
No, I never got the first one. I got the second one.
But did you put your stop at the extreme or you put your stop at the second extreme or?
Yeah, the second extreme.
So you, well, if you even if you caught it, like if say for instance, if I got in here and I got stopped out somehow, but I got back in here, my stop will still go at the extreme. Not anything to do with where I am, but the extreme like just like final extreme. But you see,
The very bottom. Yeah.
yeah, exactly. Because like it doesn't care where I am. It knows the extreme is the extreme though. So.
Yeah. Yeah. True. But I did this yesterday, and then I got stopped out by I think half a tick or something. It was close.
Yeah, yeah.
Just and then I looked at it and I go, well, I'd already taken off when I had enough profit. I should have just left it a little bit lower than the bottom, like maybe a couple of ticks or something like that, points or two, because it's not like I was going to lose on the trade if I just put it just below that. because sometimes, like this, I only got like two on it instead of three. Because again, I tried buying a bit on those spikes, and I mean, the thing goes up like, like 15 points before you know it. So I didn't really want to buy the market on it. I find, yeah, just when the ATR is so high, at around, I don't know, anything more than say 12 or like what it is right now, 15, to try to get three in right at the very tippy bottom with buy the bid is kind of hard sometimes.
Mhm.
Because if you look at the 15-second RSI, I mean, it was only a minor moment that it was there, right?
Mhm.
And the next thing you know, it's up like 15 points. So so the ATR was at 15 or something like that, John. Should I just say screw it and just buy the market on all of them?
No, not necessarily. Like what? Because you're getting filled instantly, anyways, or you're not getting
Well,
filled.
well, I'm not getting filled with what I want. I always want to go in with three, right?
Mhm.
Um, with buy the bid. And that's no problem in the afternoon, later on in the day when the ATR is low. But when the ATR is high around 15, I don't always get in with three. Sometimes I only get one. Sometimes I only get like two.
Mhm.
You know, and I don't have that extra one to run, and the thing goes up like 150 points, and I've cut it at 50. You know,
Yeah. Well, is it because you're trying to get the absolute best bottom that there is?
yeah,
Mhm. That's the reason
because
why. That's
yeah, because
it's actually
this one it
reversing.
just yeah, but like this one it just like spiked right down there, right? It gives you no time whatsoever to like buy the bid on that sucker, right?
Mhm.
Definitely not long enough down there for three. So I played right to the fib too, along the spikes and then hesitation on the bottom. But this was because this was coming off a 261 short term.
Mhm.
But yeah,
Yeah.
no problem getting filled in the afternoon when the ATR is lower. But problems, I guess, are just in the morning when I try to do it.
Yeah. And it's gonna be because there's so many people trying to grab that deal at the same time, kind of thing.
Seems like we're definitely in the middle here. If you look at the 15-second RSI on the Ninja Trader, it just seems like as soon as it bounces up the top on the RSI and the bottom, that's basically top and bottom.
Yep.
And I did that earlier. You know,
Yeah, I think that it's basically doing this process. And when it's finished that, we could get out of here. But basically, the idea is they're trying to like basically lead people on that there's going to be an upwards push, and then they get everybody in and make it go down for them. And if they do this 3 or 4 times, you'll find nobody will be there. And it's all happening right on top of a white dash line too. And it's funny too because basically this morning there was, you know, the signal that it was going to happen out of the same side, and everybody's used to it doing this. You would think that most people they would look for it to do this because it's been spanned so much, but not me. I definitely am not interested in the easy way, and that's what people want out of it. They want to just be able to come in and do it really easily, and I think the market doesn't respect that. It's like, wants to be able to, it wants people to understand its changes and anticipate them, and when it does something so commonly over and over and over again, and people can see it so obviously, it's like insulting to the market to try and play it again almost. Like I feel like that because it's usually not going to work. And like in this case, it's just like here we go again with this obvious pattern that it's going to be making, and it's like this time it's slow enough for everyone to be part of it, and it just doesn't work. I'm like, yep, that's what team I'm on. The one that's making it not work for those that want it easy. Because at the end of the day, it's easy if you know it's not going to work, and you can position yourself accordingly. And now it's like every single person that was trying to get the long, and then they've been turned into an institutional position, and I can see that very clearly. Because it's like the institution makes a move. Oh yeah, I got one a little higher.
Yep.
But I'm starting to see that it's like the institution makes a move, and then the people respond. The institution makes a move, then the people respond. And it is a third consecutive high, well, you could say fourth almost. Something may be different with that as well. I know that the agenda is to accumulate all that they can and then continue through the roof.
The VWAP that I have there, it goes back to like June, 5th of June or something.
Mm-hmm. That's a long time ago.
You got yours. Yeah, it's the same place.
That's a long time ago, for sure. June, you say?
Yeah.
I feel like we've been here since June.
Seems like it, eh?
It does, man. It does. I feel like we haven't done anything. It's been just ranging.
It seemed so cool when we finally got up to 15, and now
And it sucks.
we're just going sideways, basically, in the bigger picture.
Yep. Feels like yesterday we were at 10,000. Now we're at 15.
11,000, yeah.
Yep. It's like that's the thing. The public, they struggled to see the 5,000 point move up to 15,000, and everybody got their opinion when it got to 15,000. I think that it's because they wanted to offload a hell of a lot, and they need everyone to just chop and trade around 15,000, and they offload a little bit. But they realize that they have control, and they're like, we want what we sold off back for the continuation. And I think that's where they're at with it. So of course we got these B points here, and that's part of my schematic.
First one there, John.
Mhm.
How can you say if it's a B point if it doesn't at least go up to the 161 or 188 or so? Because I mean, it could come back and hit it like it is now.
It's not considered played out until, well, unless it's like, I mean, it's not finished with. It could go up and hit those levels and come down again.
Okay. Yeah.
Because there's still barriers, even though it's
Right.
played out. Because I mean, we get this all the time when it goes W and then this, and then it still hits the 188 and works, and I'm like, this is just nothing. Like this could be, but I mean, right now I'm confident that it's not really a harmonic pattern. It's doing this. Like this is what it cares about, I think, right now, which is really weird. And it's kind of a
Yeah.
mix match of both things. Like it's doing the harmonic pattern, but it really wants to do this, and it reminds me of how we used to do that big M and then the smaller M, and we would return back to this one and then return back to this one. And I mean, like we have the two highs and we come back to test them. And I'm like, that's what's going on here. It's just not an M. So I see that they changed it up a little bit, and I'm like, oh, okay, that's fine. Like, where's the 61? The 50 like yesterday. And it's like, this, you won't find this on Google. But it's like, I look at this as like a pattern, but it's very basic and very easy to understand. So we're in the node again. The next move might be like a fourth wave. So you can see that, like I was mentioning, like a fourth wave. The second wave is very similar to the first, or sorry, to the fourth. So this is all happening roughly around the 61% of this major move over here. Small B points have been formed here. This one, turn this into harmonic. $188, 200 and the 261 are lining up on this major fib set here. However, making the same kind of move out of the top and the bottom quite get us there. We managed to make this move. So this is the original. This has been 1, 3, 5. Lately, we've been making an extra drive as well. The 5th and the 4th are very similar.
Hey, morning, guys.
Hey,
It's quite the movement.
mm-hmm. Gotta watch out for this move to be kind of like a fake out. Might lead to another drive. Here's another schematic.
Hey, John, I think you're muted.
Oh, what? Oh no, no. Can you hear me? Can you hear me? Yo? Wait, you can hear
I
me?
can hear you. You're good to go. Oh, geez, my voice settings were on a different. They weren't on my headphones. They were on like the monitor or something. Sorry.
Oh, no worries, man. How you doing?
Good, good. I was wondering. I didn't hear nobody.
Like there can be.
Spikes are roughly the same size, eh?
Oh yeah, yeah. I noticed that from the high of the like if you look at this node here and how it ends there, and essentially we have that like node right there. Now essentially this high, we managed to like double that, but it wasn't out of the bottom of the channel from this point. This is that possibility for a secondary low. The readjustment of a downtrend. Be a little bit more feisty about it, but I'll reapply these if they become relevant. They become. But yeah, the downtrend is the elephant in the room. We've got a blue and white line. I want it to stand out a little bit more because I think that it is being used as the equilibrium right now, and distance that we made off of it is very similar to what we're pretty much doing right now below it. Slightly different. Maybe that's the secondary low that it wants to make. Like, this is what's forming now. Yeah. So like I said here, notice we've made 5 waves now. Also consider many at this time of day have had an extra wave. May look like 3 drives pattern at the bottom. Remember?
Seen that a couple times.
Mm-hmm. I'd like to see everything get bought back up to the white dash line. Little tester move. Little tester move. They're exactly in line with the expectations. White dash lines maybe all they give right now. It's interesting because they bought it up to the white dash line and then they paused and nobody sold into it. And they're surprised just as I am. So what?
I was like, I don't like this.
Yeah. Yeah, they're waiting for people to be in their way to flood it. They're like, maybe we move it a little bit higher and they start to flood in. But they want a bigger position than what they have right now. And they're trying to get the people to bite, but they've eliminated so many of them.
Yeah, I mean, we could still do a third drive.
Yeah, I mean, it's,
161.
yeah, that could be on the table. It's working on that third drive pretty well. Got the right shoulder between the left and the head right now. It's at a 161 too, so you know, if we could make that same distance again, it would look like the 188. It would be outside of the node too, but a distance that we've already seen, perhaps? A lot of space for the red yellow line. We broke trend to get to it. We wouldn't even break it. We have to be careful. The white dash line becomes an interest again. Gave me deja vu, to be honest. This move here with its small, had a small move right there again. Same sort of idea. Honestly, it did it here too, actually. Same kind of thing that it's doing right now. It's like it forgot to make an M in between the W's. Because it was like, alright, make a W into an M, into a W, into a W. No M?
I've really been keeping an eye on too is when we're in a downtrend, every time the RSI comes up and hits the 70, it's, I would say, like you're good for some points. If we're in an uptrend and the RSI goes down and hits the 30, you're good for a long.
Yeah.
It's been doing that like the last few days that I've been seeing it anyway. So I actually stayed out of this one because I just don't like the setup.
I like it to the white dash line. Just like the people buying it up to the white dash line, they pause every single time, see what the people will do. Every single time it gets up here, we wait. And We're not seeing a lot of action by the public, but I am seeing that everything was bought back up specifically to the white dash line. So it was like, even, and again, the white dash line becomes an interest from the underside. Any short stops pulled below it are subject to being stopped out. A good short-term target for long hedges captured also. It's one of those lines that I can tell somebody's playing the game today. And they want this line, 100%. But they want everybody else's positions first, so they can't be in the way. Like their project, almost. And I guess the Wyckoff would have talked about this as the depressive state where the composite man, which he considered like a general, would basically be preparing for a conquest, as he would call it, which is like a very large run out of a depressive state that deters the public, basically. And I find this to be very relatable to that. Because what it does give, it gives in a very particular way. And it's patient, it's waiting. The perfect moment. Because if they grind it too high, the chasers might not grab. They might not chase it because they fear that they're too far into the run. And I think we're going to go with that approach because they try this every day where they're like, yeah, we got this, we can get it off the ground. And they try with big orders. And it's like, look what happens to them. Goes down, 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 down. And then continuously keeps getting shot down. But then we try to do it a different way. Grind it. You know, when the people are obviously in the way, it's not good to try and, waste resources to fight them early on in the day. But now, when they're all discombobulated and everybody's kind of at a point of indecision, I guess you could say, best spot to attack in a neutral kind of environment, slow. And we will see them attack. Like I said, the red yellow line, that's the interest, that's the one they want. They're not doing this for anything but that red yellow line. The blue one will have to go first, of course. The B points and everything. Every line on the chart will have to break, actually. But like I said, they can't tell if people are willing to trade. Like, are people willing to chase? We don't know. Like, we might have eliminated everybody that's in the area. They don't see any stops. They don't see any take profit orders. It looks like clear skies all the way to the target. Then all of a sudden they get it moving and everyone just floods in. That's a problem. Major problem. So I think they're getting that problem right now. That's why it's kind of had a minor heart attack with this level here that shouldn't otherwise be a problem. Looks like we're pushing. Nice. But everything that we just pushed is subject to being taken back in the retracement. Do you remember this pattern? This is something that we did in the morning. And it came back like that, right? Not exactly the same, but it is, pretty similar to, where is it? This thing. It's not exactly the same, but it's similar in many ways, like all the components are there. I'm like, where's the 61? It even remotely looks like it's doing a 61. Well, we should figure out exactly where it is and have a complete understanding. You know, it's like, even if you do know where it is, just confirm, right? It's always good. If it's math especially, it doesn't matter how good you are at it. If you do it in your head and you guess it and everything like that, it might not be exactly accurate. And if something is exactly accurate, like the high of that gray zone, for instance, you know, would you know that it lined up exactly like that? You know, that's my point. So I'm like, maybe it lines up exactly with something, and it really, really changes everything. I mean, of course, this thing isn't incredibly important, but it's, you know, been capable. You know, if I take this, right, and I change this to red and this to green, you know, it's is it is it not containing most of the volume within that area? I mean, totally. But you want to know the irony of that area is that this used to be a gap, and that this used to be a gap, and they weren't even used as a range at all. So that's remarkable that they choose to be now. And it's like so even about it too. I'm like, well, all right. What about the middle area? We see everything's stuck in that middle area there. We see it came down roughly out of the bottom and up out of the top that amount. That's suspiciously particular. The work of the public, very unlikely. But it's a sign of control by the entities that have it, in my opinion. Because it's definitely not the public working in unanimity in a constant stream of accuracy. But you could believe it could be Wall Street, right? But I have just as much proof that it's the composite man. That's the irony. Like it's like, you know, I can't prove to you, you know, that it is the institutions at all. That's the beauty of it for them. It's very, very hard to catch them. It's not fair or legal to do what they're doing against the public, obviously. It's just really hard to fight against them and really hard to catch them. But you can see their agenda is quite clear. Because you can take a look at, you know, okay, when you first start, it's like, how does the environment affect, you know, me, or like, you know, you? So how does it affect, you know, the person sitting behind the computer? What are the things that it makes you feel? What are the things that it makes you think? You know, what are the things that you know, the variables that come up into the situation? And how could you thinking or believing the things that the market showed you lead to the benefit of the institution? And could you see that it could be part of a process for them to have you think this way? You know, that becomes what I consider. And I'm like, well, clearly they get everybody rounded up into these areas because look at where they all trade. It's just like blob right there, all the people right there. That's a fact that, you know, all the retail trading volume is contained within the confines of the red zone and green zone. Nobody ever trades the extremes, apparently, right? So I'm like, it's really, really, really strange. So I mean, who's it good for that everybody trades in there? Because it's not good for the people that trade in there. So I mean, who would choose for that? I mean, like I said before, if anybody had the like the autonomy to be able to move the market in favor of their positions, like legally, you know, as an individual, like if you were just granted that power somehow, you'd never choose for it to make a small range for yourself. You'd want it to, you know, capture your position, and then you'd want to make it move as far as you can away from it, right, in a profitable direction. And when I can see, like, even if everybody was following the same cheat sheet, right? If everybody understood a falling wedge as it was understood on Google, why would anybody expect it to fail? Why would anybody want it to fail? Don't you think we would all just be one big happy family if it always worked out? Why would any pattern ever fail then? You know, who's it good for? You know, and I'm like, well, it becomes that the people, you know, use the same cheat sheet. They're down for the falling wedge to work properly. Who's not, you know? Like really. And I'm like, and I'm like, yet sometimes someone seems to be able to make it fail. And what does that result in? That results in the average person having tried a pattern that's so made publicly available, and then it effectively makes them take a position, and then they lose that position to somebody else, and then it goes on and hits their target. What's happening in that process? Is one person doing it to another? It's highly unlikely that they have the ability to move the market against another human being. But it's just another footprint leading to Wall Street, basically. Or it could be the composite man, right? Maybe I'm crazy. Maybe Wall Street has no capability at all, and it's some strange composite man figure sitting behind the scenes manipulating the stocks to our disadvantage, unless we know the game as they play it. And I'm like, well, that sounds a lot. That sounds crazy. It's definitely not that. So it's got to be Wall Street. The people with all the money, obviously. And I wouldn't think it would be beyond them to be, going after the people every day. And it seems to be that's the case. And I'm trying my best to find an argument against it, but it's very hard. Especially when they make it so systematically clear and accurate, and I believe that they believe there is a way the market should move, and it does change. That way changes, and it's all based off of the environment. And it's like, I find that very much a lot of trading strategies don't involve adapting, don't involve changing. And that's the problem. The idea that the market changes and the strategy doesn't. How on earth are you supposed to survive if you're not allowed to change your strategy and the market changes? It's like, well, maybe you only wait for the one thing that you do understand, and you're very disciplined to only take that exact setup. But what do you do when the same thing shows up and a different result happens? Say, what if your strategy is just to play a falling wedge? What do you do when it goes out the bottom? Are you scratching your head? And it's like, I'm like, that's just not how are you supposed to get by 5 years from now doing that. Does not sound, it just doesn't. I mean, I couldn't do it. It's just, we have to understand that there's more to it than just understanding one thing. And when I look outside, I'm like, well, it doesn't seem that that's common information. But that's the most logical way I can put it. And it's not a bad thing. It's a good thing. It's like, okay, well, I know that I have more than an understanding of just one pattern, one strategy, one ability to be able to make money off of just one move. Like, you can do more than that. And the more that you know, the less that is going to affect you negatively. Another thing I just want to talk about here with the chart is the green zone. How do we make it through a green zone? After all, is it not true that the green zone, ironically, has been the biggest problem for the reversal? You wouldn't think it, because it's supposed to be something that's associated with us going up, but it's doing anything but that. Well, it has been doing anything but that. It doesn't mean it will continue to do that. Honestly, like I said in the morning, it's very common that it's closer to the change than it is the for some reason it looks like it's like frozen or something. Like, what's going on there?
Yeah, Pepperstone's still acting up, I think.
Is that the one I was on? Damn, I didn't even think I was using Pepperstone. Alright, NDQ 100. That's the one I've been using yesterday. Let's take a look at what's going on with this one. Absolute amazing usage of the gold zone at the bottom. Everybody will remember these ranges from yesterday. Oh, jeez. That's the blue bar we were using yesterday as well. Very interesting. I'm gonna readjust this line to here. You know what? I'm gonna turn. Oh, jeez. Okay. Sometimes I've seen this before, where we make that big large move out of the bottom of that channel. It's actually subject to happening out of the other side. Nobody thinks it yet, though. And that's the value of the break of the red yellow line, is to make it even. And one thing that's interesting about that is this support line. Same medium bar that it used originally. I've been feeling the dub lately. Kind of an interesting music genre, call it. The same distance on each side of yesterday's chart. Let's take a look actually. So originally, you know when it moved out of the range, again, it's like it re-established the fib set on an already existing channel. So it's like the people of today had to be aware of yesterday's channel in order to be able to get the accurate fibs that it wants to use today. Then you can tell because originally when it left this blue bar, what did it do? It went and it ran into the green bar and came all the way back down to the 100%. And this is the 188-200. And it acknowledged the blue bar after. Came out of the blue bar, went to the 188-200, and with absolute precision came back, and then did it again, and really responded to that 100% level before actually using the medium level today, which is that gold bar, and in conjunction with the green zone. And I do like that. A lot of confluence there at the very low. You know the uh, gold bar there too is also used as a very important level. So this is a good way to look at the market and its environment. I think it's doing something similar to what it was doing here, which is fine. By the end of it all, the objective is essentially to accumulate in this area, I think. You know, they're trying to make it choppy and slow so that they can get everybody out of the way for the end of the day. Slow steps, slow advancements off the bottom, because what we can do is chop, and it's like when it blows up, everyone will be like chasing from in here. And they'll come back to make that all of those people into essentially like they'll stop them out, and very similar to what we were doing with this, except it's just a grind. Another option that we have as well is if it's still the case that they're not in the way for the end of the day, and they push up and they can actually get it relatively high without many chasers, they will go sideways. And as it goes sideways, the momentum will get hurt, people will start to short it, and then it'll go up. So we have to watch out for that. Like it's going to have a direct impact on everything as it would usually, but I think it'll go up after. Which is contrary to what it's been doing. I think it's almost done the chop though. Kind of like what happened in here. And the idea that it didn't really have any kind of bullish divergence um, at the triangle. It wasn't really, or anything like that. It was kind of neutral, and that's what I think we're gonna get into that environment again. A head and shoulders trying to egg people on to short it so they can put their stops in this area. Because the institutions don't want to have to buy there. I think they'll get into trouble if they're buying there, so they're trying to get other people to buy there. And the best way to do it is to have them short here so that they'll become buyers here. As essentially people short the highs of head and shoulders. And where do they put their stops? Their stops are buy orders, and it propels the market higher for positions that were captured lower in the event that we can trick them into shorting and then stop them out. If you do this with 100 people, then you might get a run. And literally people might start to chase their stop out. So first off, as soon as the people short it and they start to become buyers, other people that are chasers are like, "Oh my god, the market's moving, we're missing it." Then they start to buy. Now all of a sudden, your position starts to profit. You don't have to manipulate it at all because everybody else is just doing it for you, trading late into the range, chasing it, and they're all part of the retracement in the future. And you just buy all of them. Everything that everybody chased, everything that everybody got stopped out, everything that was in the range at the bottom, you end up with everything. And then the break of the red yellow line. Sounds crazy, but let's watch them in play. And they will buy everything that everyone has. That is the way of today. Not always is this going to be the case, but it is today. Might not seem like it either. That's the whole idea. Because to most people, this is what they see. Well, better yet, they don't even see that data. They see this. It starts to like fade for them. So it's very much just limited data that they get to see. Deja vu though. Consolidation, a move up, a move down, a consolidation. Whoops. I'll show you why that's deja vu.
Sorry, muted.
Oh yeah, yeah. I still want to keep in check with this one, even though it does get hiccups every now and again. You know, Pepperstone is an Australian trading platform. I just looked it up. I'm like, what the hell's wrong?
Oh wow. They were good up until about this week.
What's going on in Australia? Storm or something? It's like I opened it and it was like, oh, #1 trading platform in Australia. CFD broker. Forex broker. Some similarities there. The biggest one is the time that it took. Could insinuate that this one's almost done. And this is a way that we've managed to do this. And it's like, well, this is another way that we can just simply get this done. And when it's finished, we'll be interested in doing something else. Which is hard to get really slower than what we're doing right now, so good chance it changes to something faster. I'll be right back. All right. This is another consolidation that's very similar to the one that we have now. I like the idea of bringing this back. And we haven't seen it in a while. Appropriate, because not many people will be conditioned for it. But it's like, it's going to be a consideration of those that move the market. Yeah, with this channel like this, it reminds me of, previous times where we've essentially, continued building off of previous days' work. It's like they picked up where they left off. I find it intriguing that this square went down and then up and came back to the middle. Same square could be found here, and it went up and then down. And it's like, what could the impact of seeing the same pattern that began the trend in reverse at the opposite spectrum of the trend? Like we see a rising wedge at the beginning, and then we see a falling wedge at the end. It's not uncommon. Of course, we are in an area that's the POC. So making it tough for them is what we're doing right now. Yeah, I'm just making a triangle. We're at the 61. Return back to the triangle is going to be of an interest on the short term. Got this blue bar again, and of course the medium bar within that blue bar has only been ever so significant. It's deja vu with the morning. With those three lows that we had, not so much of an expanding high though, but very close. So the third consecutive low puts some interest on the first of the three. So return back to the triangle. This could still be the first one of two. Just doing this and then that. Not uncommon. Triangle we just saw before as well. Like literally double of the one we just did. Zooming. You can tell the support line was just a fake out line, a symmetrical triangle line. Yellow line's the one that counted, though that's the one that broke. That's the one that had the intended trend break, and it did it by force because they are trying to make sure that nobody has this position. It's clear as day to me. They don't want anybody in. They want everyone's position, and then they want to move it. So it's like the agenda of the people that already have all the money is to take everyone else's money, and then move it to their target. And I see that's happening clear as day right now. Because capitulation can be seen on pullbacks and on sideways movements. So you combine the two, it's hard for most people to survive a short-term range. When the agenda of the institution is exactly the opposite, but to accumulate everything that they can and move it as far away as they can. But once they've accumulated everything that they can, the people don't really have much ability to stand in their way. This is a 61 almost. No, it's like a 50, but still, we gotta watch out for that 61. You can see the market respects the spikes on both sides. Like, it's like somebody made it spike on both sides and come back to the equilibrium. They did it so fast it couldn't even get into the time that I allotted there. That's exactly the intention of the people that move the market like this. And anybody that tried to chase it, this move should get them out. But it's not. And they're hovering around in the faces of them, so they're gonna still, it's trouble. They're like, we gotta figure out a different way to get them up. Wasn't sideways enough, didn't pull back enough. And if they move it around too much, they can get dinged for market manipulation, so. It's best to get everybody clumped up into one spot and stop them all out at once and drive the market on their stop outs on an already accumulated position that's taken, all of this volume. Everybody's part of it. But as soon as they get stopped out or as soon as they close their position, where does it go to? It adds to the node. And somebody's keeping it. And we'll see why by the end of the day. $61 to the upper side as well. Something major to consider getting on top of. It's already a gold bar for me though. That's the interesting part about it. And out of all that's going on here, it's kind of even harder to see the original range that used to work like this. And we just used it. Green zone to red zone. It's a range move, full range move. I'm under the impression that the patience is low with the institutions today. Well, it's not even all of them collectively, but sure there's the 80-20 rule in there as well. 80% of all the institutions are not as powerful as the 20% that keep all the money, I would assume. The people at the top call the shots. And they're the ones that decide this move. They're the ones that make those orders. And I think that it's clear that they're long. But they are not afraid to hedge. But every time that it comes down, just understand that they aren't giving their long trade up. They're just making money on the short-term dip as well. It's what they name themselves after all. So if
RSI says it's going to go up. So
yeah, that's good.
it doesn't lie.
That's good. That's good. Let's take a look at it.
Yeah, there's been some decent dips though.
Yeah.
I've taken a couple and it's been good.
Nice.
there's just so many plays in a day that if you just show patience or whatever, just wait for your perfect setup with spike, whatever your parameters are. I mean, there's just lots of opportunities.
Mm-hmm.
You don't have to play every sort of trade or try to get
No,
into
no.
every trade, but there's just so many opportunities to long and short. It's just unfreaking real.
Yep.
But in these consolidation areas, the two lows prior to this were both off 188s, and they were easy pickings, big time. And they were both, I think, at the low of the 15-second RSI too.
Interesting.
Yep, they were. I've noticed that a lot. You just take the smaller fibs and you're looking for taking it up, I don't know, 20, 30, 40 points, or maybe even much longer, then yeah, you can just put the fibs on them.
Yeah, I saw that the last one,
Compounds.
it had a nice third drive. It reminded me of the one that we saw earlier in the day. Because it had that 1, 2, and 3 lows going down there. It
Like you always don't have
continued.
to just come it up, make it come off the bigger fibs or whatever the deal is. But
Yeah, exactly.
if you're looking at getting in because you haven't gotten in the bottom or the top, whatever, then put some fibs on it. Short term, you'd be surprised.
Yep. Right now it's at a centralized area across the board.
But make sure you only enter when the 15-second RSI is at the bottom, or very close to the bottom, or very close to the top of the extreme. So top being 70, bottom being 30. Just a greater chance of being successful. That's all.
Mm-hmm. So we're running out of node. A little bit of interest on this level. basically right in the middle. That be a little bit of a trend. The green zone is also in play. Very triangular. Is it not playing out an inverse head and shoulders into a head and shoulders? One of them's gonna fail, and it's probably the head and shoulders. Ultimately, it's just one way for it to go sideways while it's doing that, and you know the cool thing about this is it's the right shoulder on both of them, and when it's done both of them. So maybe it's done the whole consolidation. Now the funny thing is, it could fit that entire chop area that we just did there again before the trend break if it wanted to. That must be loud. Now we can readjust the trend. POCs shifted down here as well. So no other area has had more volume on the chart than this one. Like a double retest as of now. Like a blue and yellow line almost getting tested from both sides. Pretty even. We haven't quite tested it from the underside, but I mean, I'll be damned if it doesn't. back into the green zone again. Roughly the same spike out of the top of the red zone that we had out of the bottom of the green. I find it suspiciously particular that yet again we use R. Everything brought back up to the white dash line, which is on the other chart. Gotta watch out for that. Back to the white dash line again. So it's basically like anybody that got excited on the big push up there and they became buyers, they just became sellers to the institutions again. So all the people that were in the morning excited to get to the push up, they got stopped out and somebody kept their position. Something like that happened here, and then it just happened here again. And the moves don't have to be as big to entice as many people into it, but what's left is going to be minimal because the persistence will be wavering with the public at this point. That's to be expected. I find it suspiciously particular, like they've bought everything back up to the white dash line in that range and then little grand finale there, just to make sure anybody that captured anything long in there was then a seller getting stopped out down here, providing an even lower position for the institutions. A little inverse right shoulder. Again. So, like I said yesterday as well, the idea that, you know, having held the previous long trade, the original long trade, and just hedged against it to this level, it's so much easier than trying to catch the level because everyone should already be in. That's the irony. Because the trade was clear at the very, very bottom before it even started to remotely get close to this environment. And every day that that trade is given up, you buy a ticket to this show. Where we can expect it to be difficult, but we choose whether or not we're going to be part of it. And every single day, if you don't hold, then you choose to be part of this, where this is undeniably more difficult than holding. Hedging against a position from the low is way easier than trying to catch something in the middle. Remember, every moment that goes on, we get closer and closer to the red-yellow line. I mentioned if we run at it, we could lose the ability to break it. And that gives me deja vu with yesterday when we had the same thing. Same thing. Deja vu. Red yellow line at the high. Got some distance to the red yellow line though. If it uses energy to move up to it, it may struggle to break it, but enough time spent in the blue area will bring us to the red yellow. Also consider it becomes a consideration for being able to turn around when it breaks. And then you can see running to the red yellow line was using too much energy, had none to get through it. Also, next time we'll have more from what I can see. It has more time to build a bullish divergence now. It's like the phases of yesterday over and over again. Third consecutive low. Spikes and wicks out of the bottom of the node. A new trend? Only now it becomes of interest. Like it's got a blue line that it's tested from the underside. Just hit the 188-200 to the first B point. A little bit of progress, not much. Yellow line is breaking. The first test of the 200. You can see the 188 from the underside. Essentially like a fake break. Similar somewhat to the one that we had before, except it makes a new low. Watch for that test from the underside, like I said. Because it's like if you didn't hold, then you're forced to play the game. And it's like, the least you could do is understand it if you're not going to take it. But the more familiar you are with it, the easier you can find yourself a part of it. You know, if you took it, this is exactly where you want to take some off. Make sure it's safe. It's for a very select few that find this attractive. And it's anti the public. Like this means like about 20% less people will try again. And that's what they're going for. And each time less people try, the institutions can accumulate less. So, you know, if they're not going to move it down when there's nobody to stop out. But that move right there was a direct jab at being able to add a little bit more to the institution's positions before they reverse it. Yeah, baby. Only if you know the game as they play it. And they're clearly showing their colors, but in a very particular way. Where's the room for any other strategy? I don't know. Because there's only one that I can see, and it's the way it's moving. So it's very much an interesting one. Yet, the last low wasn't made like this. And I can't remember one that was made like this recently, but it was appropriate. Because this is the way they do things. And back up to the white dash line.
Very close to my 188 short term, but I know she got the 188 on there too, so worked out good.
Yeah, it did. But like, you know, a lot of people took the 188 200, got stopped out, and weren't aggressive with it. But it's like that they found that small area because of basically everybody getting stopped out there. They knew they weren't going to try again, and most people I don't think did, and that's why they found that window to be able to move it free of obstruction. Now it's too late for people to chase it. They feel like they've already missed the move. Little do they know, it's likely not going to stop. Some people have chased it. We'll deal with them a little bit here. It's a profit taking point at the B point. What they want is anybody that does have the trade, they want them to sell the whole thing at the B point here because it stopped moving. So they're not going to keep holding, especially if you do a little bit of a pullback. Most of them, they'll fold instantly because it was tough. Psychology.
I'm coming off at 261 to that B point down there.
Interesting. Very small one. I think we get through it though ultimately.
Yeah. Okay. I'm for it.
Yeah, I literally just opened up my screen and I can see there's another guy that's streaming in another thing, and he literally shorted that pop. He's part of the squeeze. Interesting. Just noticed that. Only if he was aware of what's happening to him. He's part of this process right now, ironically. Not good, not good, not good. I'm trying to find a clip. I made one. Yeah, I think I have to make another one to be able to see it. This means like about 20% less people will try again. And that's what they're going for. And each time less people try, the institutions can accumulate less. So, you know, if they're not going to move it down when there's nobody to stop out. But that move right there was a direct jab at being able to add a little bit more to the institution's positions before they reverse it. Yeah, baby. Fighting against the red yellow line, you're going to be part of the squeeze. And it's clear to me, you know, whose team you're on if you're part of that. Low, you know, very, 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 very few will have caught it. Look at the volume. Everybody was a seller in there. It's all red because they were all getting stopped out. People were sellers at the worst price, but to who? The people that can move the market like this. That's the case, though.
What's your target here, John?
Oh,
The red and yellow, get some resistance there, or
no,
just go
no.
ahead, or what?
I'd like to see it actually double this entire range. So like up to here. And it doesn't have to stop there. Like with these players that are here, they're almost finishing up their accumulation. What are they going to do with this position? Definitely holding it overnight. Definitely holding it overnight. 100%. They don't do this for the rest of the day. I mean, if they make it move 200 points, sure, I'll sell. But at the end of the day,
This move started right at 1300.
1300? What do you mean?
Yeah, the time.
Oh, the time. I was like, what?
Oh, right at 1300.
1 o'clock, eh?
Yeah.
Yeah. Great job, Super. I don't know how to get to my clips other than making one and then going to it, which is kind of counterproductive because I don't want to make a bunch of clips every time I want to send one in there.
I've seen those clips of you.
Hmm?
You're just basically repeating what you say here.
Oh no, that clip is a recording. Like if I
Yeah.
push Alt C, it records the last 30 seconds, and I was quick enough to capture that because it happened within 30 seconds. So I don't have to go back in the video and actually find it. If I can make it like that, then it's perfect. Oh, share a clip. Okay, there we go. Anti the public. Like this means like about 20% less people will try again. And that's what they're going for. And each time less people try, the institutions can accumulate less. So, you know, if they're not going to move it down when there's nobody to stop it. But that move right there was a direct jab at being able to add a little bit more to the institution's positions before they reverse it. Yeah, baby. Anti the public. guarantee that.
188, 200 from the B point down below. Around 12.43. Yep.
That's my white dash line. I don't know if they're going to let anybody grab that. I don't think they want to give people an opportunity. I think it's going to go up and then it's going to go sideways. So it's gonna squeeze people. They're gonna short it and then it's gonna go up, I think. Even the red zone, at most all it could give is a green, I think.
Yeah, as for sign, the 1 minute is on the RSI is hit extreme since about 10:30 this morning. Another high.
Oh yeah. Coming down to test the middle bar could be on the table, but you want to know what I think could happen is they both kind of stretch down when it's going down, right? And then what happens is they both can be stretched down. They might not actually touch, but when they stretch up, the orange one will stretch up to the blue and it'll look like it did touch in retrospect. And I'm sure that can happen. Because when they both go down, they're both plunging down like that. And if they both rip up, they can both rip up and you can kind of get this one to touch the one from the below. And I think that's actually what's going to happen. Because it doesn't, I think it wants to fight against the people that are shorting it. This is the kind of like move that has always been shot down from the beginning of the day. You know, it's like they tried it here when the people were there in full force. Now they just put the same order in again. Exact same order. And they stop buying, like it's like it pretty much just keeps buying, and then boom, it stops. And then now you see what the people do with it. How do they respond? And it's just slow and barely anybody's there. Yep. This is the people's move. But are the institutions always going to make the same characteristics before reversing? No, 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 no. It's adapting with the institutions, understanding exactly the environment and exactly what piques their interest as much as it piques mine. anti the public. Like this means like about 20% less people will try again. And that's what they're going for. And each time less people try, the institutions can accumulate less. So, you know, if they're not going to move it down when there's nobody to. Yeah, that's a good video. I like that. I got to make it into a short or something. But that's, I was trying to make this morning's video into a short, and I couldn't even do it because, like, as soon as the market opened, it came up and hit my targets, came down and hit my targets, came up to hit the node, and did everything we wanted it to do, with absolute precision. And I was like, well, that happened in under 5 minutes. I already lost count of how many targets I've taken off. And the violence of everything being bought back up to the white dash line, and then the grand finale of like forcing everyone out of the way. Huge. But if you're looking for it, then you know this is clearly the work of not the public, unless you find that the public found unanimous ability to trade exactly at 1 p.m. after really slow movement, like 1,000 people or more just all together got together in 1 minute and moved it so quickly. No, I just can't have it. Can't have it. And then you look outside and you see what strategies they use. There's no way they even consider the time. There's no way. And it's not part of the one thing that's on, one of the strategies that's on Google. And I mean, what's funny about it is, as well, is the 188 had to fail before it worked, and I think it got more people out and then ran to their position without them. Like I was saying before, I was like, literally, they get them all excited about a position, about a trade, right? And then they stop them out and go to their target. That's literally what just happened right there. Because they lack persistence past that point. If it's like 11 times they've been trying and trying and trying, and it seems super slow, and finally, they're closer to ending their day than anything. It's common culture. And it's like, it's good to not be that way, clearly, because then you miss the move. And I used to be that way. I used to know a bunch of people that were that way. I couldn't wait for the day to finish when I was on the floor and I didn't know what was going on and it was slow and I couldn't find any relationship with anything that was going on and I didn't know what was going on and I was waiting and waiting and the movements were so slow. And let's say you even had a bad day and you were locked out of your account and your manager made you stay there and watch the rest of the day anyways because you were, you failed that day and basically lost your threshold amount that you're not allowed to lose, and you just have to sit there, have it dwell on your mind. And most people, they have the autonomy to choose what they want to do. Everybody will just go to the couch, go to the TV, make it easy for them. Nobody's gonna, write a report about it.
John, you get a new threshold amount every day, or how does that work?
No. Well, it changes based off of how much money you make. So if you make a bunch of money the previous day, you get more on your threshold the next day. If you continuously make money every single day, they actually unlock more capital for you to be able to use. So the more profitable you are, the more capital you get. And yeah, it's a good system. I'll do the same system whenever I have a team and I'm managing them all. It's gonna be really.
Does the guy who's actually doing the trading actually get a percentage of what
Yep.
being made, or how's that? I mean, he's certainly not working by the hour.
No. And well, that's the thing. See, the way that I want it, like personally, like I want to make like a group where everybody that's a part of it is like a partner, and everybody gets paid out as like a group, and everybody, they're not just coming in to work for themselves; they're working for the team. And if there's a weak link or something like that, it's within everybody's interest to make sure that they're safe.
And everybody's helping everybody.
Exactly.
Interest, right?
I never worked at an office like that. It pissed me off, man. Everybody's always like, I'm coming in for me. I'm coming in for this. I was like, it's like nobody cares about the institution. Nobody cares about. Well, it wasn't an institution. It was like a firm, and like nobody cares about the firm. They all care about themselves. That's clear. Yeah, they made that clear for sure. Yeah.
Makes his own shots, right?
Yeah, it is like that. Yeah, man. I even had days where. Like I'm sure I've said it before, I've even had days where I went in and because I was doing better than other people that were there, they tried to psych me out of my positions, like when they knew they were going to do well. And I don't have any time for that. That's just terrible. I'm to this day, like, they're down as terrible human beings in my book for that. But I mean, it's not like a violent thing, but it's still shitty. You're a shitty person if you do stuff like that. In my book, like, doesn't help him anyway for me not to do well. I mean, it just pissed him off because he was a bad person. I'm like, I don't like that. And if we need less people like that, you know. And I'm sick of having managers that feel like they don't need to trade. It's not like, I don't like the idea of, even in a normal workplace, if the manager doesn't know how to do any of the jobs. I was talking to literally a manager. I was playing video games with him. He was a manager of, I think, a factory or something, and he was saying like how they don't want him to do the things that his workers do, and he's like, well, he likes to know how to do it, so when they need help, he can help them. And I'm like, what do they say to that? I'm like, well, they rather you as a manager stand above everyone with your arms crossed. It makes people work faster. I'm like, well, that doesn't make any sense. Because that's what they seem to be trained to do. Even in finance, they just sit there and watch everybody else's progress and give you bad looks when you're not doing well. And you know, you can tell that they thank you only because you're making them money when you make money. I mean, like, that's not good. You grow not to like them. Well, I did. I didn't have any respect for them, so not a single one was any different. So, and it's definitely like, it's like, when somebody's done things to you you don't like, you learn how other people would feel if you were to do them to them, and it's like you wouldn't catch, yourself doing that thing to anybody else. So I'm like, it's the it's the way to have it. I can tell one thing right here. So the red zone did bring us to the green zone, and after all, that is what it is designed to do. In this case, we did get back to the exact point that the green zone begins.
In the 1 minute, hit the 15 RSI and bounced up.
Did it now? Oh yeah, it did, didn't it? I like that. Didn't actually move the orange line much. I thought the orange line was going to move a little more, because it looks like it's capable of moving more now, but it doesn't really, not really continuing to move more. It definitely isn't moving like it was though, so something's changed. On the moment that they got involved, everything started to be different. Like, this could even turn into an entire Wyckoff that fails. Like, so it gets everybody invested in a giant Wyckoff that goes through like every single one of the phases and then ends up going up when it's supposed to go down. The 61 is not the 61 anymore, but I have it marked. Because we made a new low, the 61 a little lower as well. I had...
50 and, I don't know, 55 or something.
Mm-hmm. Yeah, in this one, it's so weird that it actually looks like it really responded to the new 61. It's like we did a 61 up here, and that was a 61, that dash line, and then we just did another one to this one here. Very interesting. Undeniably, the construction of a head and shoulders to inverse head and shoulders, the schematic is definitely there. Like if I take a look at this over here, like it's an interesting one because we've got the left shoulder, the head, and the right shoulder. The left shoulder, the head, and then the right shoulder. You know, low, lower low, higher low, high, higher high, lower high. The white dashed line in this case is a B point as well. And there is another one even lower, but it is a lot more insignificant. The blue and white line may get used as well in this process because it is the POC area there. It's a high volume node, easily interchangeable with the current POC wherever you do have it. Another level, the 61 from the support, being tested from the underside. Not quite the same level as the left shoulder, but you can see that the left shoulder, it starts from a lower point, but the volume seems to end, you know, roughly around here. So that area in there, you know, it's very much like an area that could be considered similar to the one that we have up here, where everything past it is wicks and spikes. Hold on a second. It's an interesting situation. Why? Because of the fact that every time that we've gyrated through the high and low, it's been relatively even away from the blue line. You see that with absolute precision, it came right off of the bottom of the distance that it made on the top. And that was one way for it to revert back to the mean as an S wave. And now, in order to make this movement out of both sides of the triangle, it cannot be even with the blue and white line anymore. Because making this spike out of the bottom, making it out of the bottom either way, puts us less of a move. So I'm curious about that. The final node. The distance so far beneath the blue and white line has been what we did make on either side. So could it be a standardized wick and spike? becomes an interesting consideration. And the distance out of the bottom of the range that it has been making still wouldn't get it the same distance away from the blue line that it did before. So having less is actually something that could be a signal, because we've always managed to expand. So in order to continue making it even, it has to make a new low, but ending that could really threaten the red yellow line break. Because in order to continuously make it an equal distance on both sides of the um, red yellow line, or sorry, to the blue and white line, like we have been doing, the same distance on both sides, returning back to the mean, and doing that again would mean here. But stopping early could mean ending the entire sequence and the relationship with the blue and white line altogether. And that's cause for change. Because basically we can see here, the last time that it away from the range, it was within that triangle, and that triangle went to there. What we do have now is a trend. Same as the one from before. I can tell that closer to the break of the actual trend, fake break or not, the violence with getting beneath the falling wedge's blue line was harder and more like erratic when it amounted to more of a break and more of a progression at a swifter rate. Yellow trend breaking. Now, it rings a bell that this is a triangle, right? And it's contained within this area, and it's got 3 lows on that. Now, you know, this area here is also a triangle, and it also has 3 lows. Putting that out there. And this triangle was also a falling wedge, and it had 3 lows, but was very difficult about its playout. And its playout was worth more than the one that wasn't difficult. That's the irony. What could be the value of being in for the break of the red-yellow line when every single falling wedge that there has been today has done at least double? Strange that it almost looks like it played out the same kind of way. Could it be the case with this one as well? Am I green? Because doing that, oops, would get us exactly there. Like if I take this, and it's like nobody's going to be doing this, guaranteed. It's like that's what the way that I see it's appropriate right now. It's obvious that each triangle means a certain calculation, but it's a calculation you would expect people not even to be able to notice in retrospect. So it's likely to be used again in the future, as it has been used and used and used again because the people don't understand it. And at the end of the day, that I have a lot of respect for. You know, something that works with so mumuch precision. Why is that each falling wedge manages to double at the minimum in distance away from the original trend break and a little bit more. What is that little bit more? You know, and can we find it somewhere else? Like somewhere else inside of the triangle, perhaps? That's tough. It's tough to say. I'll have to think about that. But the more that it gives, it's almost like it was the initial move. Little bit more actually. And like I said about this, you know, ending it, not making it even, is just another way to get rid of people, because people will see that it was even and they will think that it's going to be more attractive when it is even, because it was even before, and when they look back in retrospect, they'll be waiting for it to be even, and it's just not even for them. Because this move up out the top is actually a lot larger than the move that we're doing right now. It's to the bottom of this triangle. And it never made it to the bottom of that triangle. Yet it chooses to reverse. And I think it only does it because the people get to see that even has been working, and then when they go to try it, it's not going to be there for them. So I think it's all part of the plan. It's like threading the needle, like I say though. It's like really precise, really quick, particular movements that have to be done with very like like a lot of caution, and that's a very severe thing. But it's one of those days where the whole day seems hard to be long. Yet, in the coming days, it will be obvious that long was the right thing to be throughout the difficulty. Ironically. Now, not holding long at a loss by any means, but maintaining short-term aggression towards being long and finding long positions and keeping them, regardless of if it takes it back 11 times. The red-yellow line still exists and only gets more profitable to be part of its break, each low that it makes. As it will end just like every other trend, the past year, past decade. And when it does, the green dash line's above. So literally, like the way that I've explained it here, I'll just go over it real quick. So, a new range to consider, spiking out of both sides at the moment, testing the low of the node yet again. In order to continue making it even, it has to make a new low. Ending that could really threaten the red-yellow break. As it is somewhat difficult to keep the characteristics of the current trend, plenty of space and time until the red-yellow line. Small patterns can fill the space that's left before the final break of the red yellow, and basically that means that this area here, there's a ton of space before we break the red yellow, and there's a lot of movement that we could do in that area. And then not making it to the bottom of the white triangle means it has broken the characteristics of making things even around the blue and white line, and a change as large as that one could threaten a change of the entire environment. So, as you can see in the past, it made it particularly even away from the blue and white line, like so particular. And the people that were waiting for that to be the best trade again, they didn't get it because they were waiting for something that never happened. At the end of the day, it was clear that it wasn't going to be made even. And we can see on the next picture, notice that it broke the characteristic. It did not continue to make it even for those that noticed it was the best trade of the past. It worked the best to be able to be the one that got it from an even point away. But not this time. It reversed early in an attempt to move before the individuals could find comfort in the equality away from the mean. And that's it. The people that are left they're really trying to shake off people that are watching closely. But at the end of the day, they had everyone convinced that the red yellow line wasn't going to break. They just bought everything everybody had to sell. This entire run created chasers, and they were all sellers to who by the end of it? By the people that are seemingly buying it back up to the white dash line again. Interesting. Suspiciously particular, I'd say.
That's a strange pattern, no?
Mm-hmm.
Where's the start of the day? Oh, I see.
Yep, just in here.
Yeah, there's some, I think there's a lot of reactionary things going on with some news for tech people not selling to China. But I think it's got people acting funny.
Mm-hmm. You know what it does? Would you agree that that is something that would put widespread fear across the American public and potentially create them into sellers? That's perfect at a time of liquidity when the institutions need liquidity to create some news about China not servicing freaking Nvidia when Nvidia's been the hot shot talk of the town for the past few weeks. Now we release crappy news on it and everyone becomes a seller because all that hope that they had built up for Nvidia is now shattered. And I'm like, obviously they just want your positions. They're releasing news articles that are clearly they're buying right up into everybody's selling, and I can see that with absolute precision they're waiting to make sure that short-term traders don't even get a part of it. So I think that it's all just like it's not long-term for Nvidia. I think that I think it's just spin doctoring personally.
Yeah, I believe you're right.
Yeah.
It's such a weird thing. Like it really was like 3 days ago or Monday or last Friday or whatever. Everything in the news was all this stuff about how good Nvidia is and the second boom and all this stuff, and then just one news article and people panic. It's the wildest thing.
Mhm.
I mean, uh, Nvidia. Let's start at the beginning. ASML, the people that make the machines that make the Nvidia chips, they can't sell to China anymore. China's last ditch to get AI chips was through Nvidia, and so that's being cut off too. It's strategic politically to keep China from developing their AI technology because it's directly related to war capabilities.
Hmm.
And so it's just a play. It's political, and people get weird.
Mhm.
But Nvidia knew it was going to happen in January when they told ASML. Or I guess
Interesting.
strongly suggested, whatever.
Yeah, and I think that they're gonna find that there's those rare precious metals in Canada and stuff like that. They might be harder to get, but I think they're gonna start getting them because all the
Yeah,
chips are made
lithium
over
would be
there.
nice to have.
Yeah, right.
Lithium, particularly, and I guarantee you, on your west coast, up along through the Cascades, there's lithium in those old volcanoes. We just haven't gotten to it yet.
Interesting.
I mean, if you look at south into Portland, or south of Portland rather, there's a volcano where they just found this lithium deposit and made this big news, right? So it's just one of those elements that gets kicked up along that area, and Canada's got a bunch of it.
Mhm.
And I think you guys as in Canada, Canadian industrial folks, found iridium out that way, up north, Northern Territory, something.
Mhm.
And that's a big deal. Iridium is used in all kinds of stuff.
Yeah, it's like I'm sure we could, start doing business with some country close. Like, what about like Mongolia or something like that? Let's make them some money. Stop using China so much.
Yeah. I think it's hard to not get pushed out, like especially if you're in that region, to not get pushed out by China.
Oh yeah, for sure. Being a monopoly isn't illegal for them.
Oh yeah, and they don't have rule of law and all these other things that keep things a little bit fair.
Yeah, I just found out that even Canadians that are, like second generation, they come after you for money and stuff like that. I'm like, wow, that's insane. Even if you weren't even born there, you never even been there, but they want to try and say that they claim some of your money and stuff like that. At least they've
Yeah,
done it to somebody. I don't know if it's
and the
public, but yeah.
secret police stations that China has across the world kind of bug me out too.
Yeah, I don't like the sounds of that. It sounds, yeah, I don't like that. That's rough.
Yeah, and that's just they're out there setting up cameras, scanning people, taking a picture in time of everybody, and artificial intelligence can parse all that data, and that's what we're trying to stop them from doing is using the data that they're getting because it's so much that a human can't comprehend what's going on. So you got to get computers involved now.
Interesting. I'm very glad that when I went to school, nobody had phones still, and that's gone.
I know. Same here.
Actually had to do things, think about
I
stuff.
was in high school and my buddy had a brick phone, and that was
Yeah,
pretty
yeah.
cool.
Yeah, the brick phones that had Snake on it, or whatever that game was. I remember that. In
Oh
England,
yeah,
Nokia's. And I mean, that's
yeah, the
hardly
5150.
that's not really the distracting device that it is today, I tell you. Because what it stops people from doing is thinking. It makes
Yeah,
them just it consumes their mind with like entertainment. And
yeah,
I definitely have been a victim to it, but not so much anymore.
yeah. I try not to use my phone for entertainment. I'm always trying to just read something because
Yeah. Yeah.
but I've got a computer for video games, so whatever. Maybe people think I'm weird.
Yeah, in the future everything will change, right? So, who knows?
There was some stand-up comedian that was like, but if I had told people back in the '90s that we'd all be typing with our thumbs in 2020, they called me crazy.
That's funny.
I was talking to a friend the other day, and they still remembered some of the number codes for when you had to hit all the numbers to send texts. Like,
Oh yeah.
whatever, a couple of times to get beat.
Yeah. Like the old landlines would have on them. Today's had a shortage of 5-wave moves. I think we might be getting ready to make one. Change the hour just happened, increased volatility slightly, but not much movement away from the green zone there. It is being used as support, however. Somewhat obstructed by the blue and white line, of course. As it gets ready to be... What's the word? Neglected? What's up?
Oh, no, I felt like I stepped on your words there. Sorry.
No worries, no worries.
So would you say it's time to kind of think about the next trend here, or start looking for that?
Oh yeah, well, the one thing about the next trend is I always understand that this trend will have to break in order for the next one to really become something that's an incredible risk. Because so long as we're contained within um, this line, it is going to be undeniably in a downtrend. And yes, there's trends that are inside of that downtrend, but breaking that major downtrend can have more of a major implication than any other thing that goes on while we're in the downtrend. Like it's like all of the characteristics that have started since here, which is basically the beginning of the day, can change. And I think we could get a rally. Like let's take a look at this other chart here too. Wait a second. No. It was the other chart where I had a gray zone all the way up here. Yeah, that one. There we go.
Wow, look at that push.
Oh yeah. And it's like this could be the third wave I was just talking about as well. Nice third wave push just after the second. Like I was saying, we didn't get a 5-wave move in a long time. 1, 2, 3, 4, and 5 could be on the table. Using the red zone is also something of an interest. This B point was already hit, but it is the POC. We came up roughly to the 61, so that's obstructing us a bit. We've left some B points open down below, but what's funny about it is this time, it didn't leave a tiny little B point. And it's been really bad about that lately. Like I've noticed that it can go and make moves like this one and leave like the smallest crappiest B point in there. And if it doesn't get hit properly, there's it pays the price, right? It really comes down just to hit the stupid B point. It didn't even make a new low. It just came down to hit that B point, and I'm like, wow. What is with that? So it did it again here, but now we've constructed it differently. And it's moved up slowly. And the only people that I could see that could chase it are going to be the people that are involved with this push off the green zone. And we might see more of the green zone, it's fine. But when we get a push up like that, it puts a lot of emphasis now on the support line. Because you're that much less likely to be readjusting it. Like a smaller dump that's similar to like the past 4 or 5, you might find that you're going to readjust it another 4 or 5 times, potentially until it actually becomes relevant.
Can I ask you a question about the tool itself?
Oh yeah, what's up?
So on the Fibonacci on the trend line, I'm trying to figure out how to use that tool the way you are. Where you're dragging it, I just don't know where my cursor is interacting and why it's moving the way it is. The tool itself.
Yeah, because I think that the person that made the tool doesn't even use it. It's not. it's not intended to be used the way that I use it, which is ironic. I have to first plot trend lines down and then apply them on top of the trend lines to get them to work the way that I want them. And like that helps a lot. But if you just start with the with this pattern, how do I find, you know, this low? Is it just you can make it in there, but it's not as good as actually duplicating one and seeing, like, if it does have a clear resistance line. Um
Yeah.
yeah.
And then so you move it so that the 100%'s at I don't know, because I drag mine out of range by accident all the time. I'm like, why the heck? Where I'm clicking in the wrong spot.
Mhm. Yeah, I think it's best to identify the range first, and then, you find that it's appropriate to have, a channel on it, and then you can apply it. And like in this instance, this channel right here, I find it interesting to me because if I was to apply it in the wrong direction first, when we look at the fibs that it presents, the low was roughly at a 261. I know there's a lot on there, but this yellow line right here is a 261. Now, if I take these off and apply them in the opposite direction, the 261 was this line right here. So I find that very, very interesting that at the end of this triangle, we had that same distance, and then at the end of this triangle, we had that same distance roughly. Save some wicks and spikes.
Okay, I think I was fundamentally misunderstanding something. That helps because uh, you apply it either direction, but if you're reading it right, okay, yeah, I just need more practice with it. So you find that
Yep.
100%, and then okay, I'm gonna keep practicing. Thank you. That gets me going.
Yeah, and you can even see, like, if I apply it on either side and highlight the middle, now it really like starts to stand out that there's a difference between the two ranges. And it roughly spent this much time making this fake out on this side, and then the same thing goes for this. Roughly spent, we could say, that much time. Now, yeah, it's very strange that, it is possible that this is one method of being able to do this, which is really strange because everything meets in that middle area as an equilibrium, the heaviest volume node. We just came up to attack it, basically.
Okay, yeah, the training still continues. I really do appreciate all the help and let me talk and stuff. And I know some of these questions are remedial, but I appreciate the help.
Oh no, yeah, it's totally relevant. Definitely, definitely is a big help to make sure that you don't have any curiosities and they're all understandings by the end of the day.
Yeah. Oh, I also like that the little tooltip you put up with the explanation of your color codes. I picked it up. I was
Mhm,
just
mhm.
listening to you, but seeing it written out was kind of neat.
Yeah, yeah. I'll put that up for a second here just to go. Yeah, like that. And essentially has the blue abstract lines, and they're barriers that can basically be in the way of anything that we're doing. Like, perfect example is the one that we're on right now. It's essentially only a couple times has it managed to get through it without budging at it, but that obviously it paid the price each time that it did that, and now it's coming back to spend time at it. And the yellow lines can break with force in the opposite direction, and they change the trend into uh, new directions. And the green dash lines are targets for the breaks of those yellow lines and the red yellow lines. The red yellow lines are basically more impactful than the yellow lines, and can even be greater force than the yellow ones. And of course you got the red zones and green zones, the support zones and the resistance. And here, 2 seconds. Oh, yeah, sorry, thanks. The middle of this bar here is definitely associated with the new channel, and its potential is pretty large. Take a look here. We can see this one, it's the old channel from before. So it's been out of it and so on. It's not as current as the other one, but it definitely is also in play. And, it has a short-term trend, and that's likely to be readjusted soon. It's not necessarily a violent break as much as this one could be. Now, this one could be more of an interesting line. And the irony of that line is it's not it's exactly parallel to this line here, and I think that that trend break could be relatively important, but we do have time. Yeah, I'm just admiring the facts that it has shown us. Like, for instance, it's common that it's not necessarily an inverse head and shoulders every single time it reverses, but we've had a lot of falling wedges. Some have had more trouble than others. But I look at this and I'm like, is it not true that that's very similar in many ways to what we did in the morning? And I'm like, well, even the angle that it used, it's like we did this before. It's like its job was to double and more. In this case, what did we do? We did the last triangle. How much we doubled. But it is true that this triangle did come after the big one, and it is true that it's coming after it again. In a strange way, the confinement area that it chose to make after the big triangle was a smaller triangle, and these were the angles that it did have, and that's a fact. Now, it's just like this area that it had, the bigger triangle, it had a run up, right? And then this triangle happens. So we do that, and then we're confined, ironically, by similar barriers. Less of an issue reversing this time than the last, I would say. Because the last time that it reversed, it went into like another 3 drives. Whereas in this case, we can see that we've already made 1, 2, and 3 lows. And it's returned back to the first of the 3. This one right here. Some could say that it was even responsible for making 1, 2, and 3 highs, and then into 1, 2, and 3 lows, which gives us kind of that expanding nature. Not as good as some of the other ones. But they have also had that. And out of the bigger falling wedge, we got that expansion. Like it created that 3 highs into 3 lows. Wow, it did a lot more than 3 lows altogether, didn't it? But it doesn't have to now, ironically. What it has time to do must fit within the area below the red-yellow line. That's another interesting point. So what it did come to do after it tested the first of the 3 lows, it was testing the white dash line as well. Or in this case, it's not. The previous triangle, like the first time, was responsible for getting it to and through the white dash line. This triangle and its breakout is not associated with the white dash line. And one thing about that white dash line, and this very moment, is that it is impossible to get to the white dash line after maybe a minute or two from now without breaking the red yellow. Unless we get there pretty much now, it can't get to the white dash line without breaking it. Like imagine, like if we go, oh, take this much time, how do we ever get to the white dash line without breaking the red yellow? You know, it'll have to break it to get to it, right? So that's what I mean. If it gets to it vertically now, yeah, sure, it will be able to do it, but you can see the value in spending time here because the red yellow line will now become an ultimatum between getting back to the oh so commonly bought up to white dash line and ending the characteristics of this entire environment as it does that simple task. Something that it's already getting familiar with the break of. Those that remember the daily lows will understand the value in testing negatively to a red yellow line, because when we were in the daily lows, that's what it really liked to do. It had negative responses. You see how many negative responses it made to an oh so clear trend that offered so much value to those that had exposure to its break, yet it was difficult for them. Very difficult. Because at the end of the day, you know, running up to a trend like that and responding negatively to it doesn't mean it's not going to break. It's just not going to break with these people at the end of the day. But then every single person that was down there was buying below the green zone to a range that nobody even knows is a range yet because it hasn't been used more than once. And you know, this entire range up here is the red zone, but it used to be a range itself, as you can see up here. And so did this one. And the value of breaking out of the short-term trend could be to even play out a level like this one and its capacity to be able to double into that range before coming down. The blue and white line, you know, and it will also soon become the case that we'll have to get through the red-yellow line by this time in order to continue having a relationship with the blue and white line. So it becomes, you know, this trend, you know, we have to look at the steepness of it. Like, imagine we're in it tomorrow. Where do you think we'd have to be? By the days changing, we'll have to be, by the days change, we'll have to be down here in order to still maintain this trend line. Very, very steep. That means we have to repeat the entire day probably 4 or 5 times over in order to maintain that trend. Just to keep it overnight. Or we start to think about the reality of it breaking and the unrealisticness of its ability to continue holding, and the more realisticness of us continue to use the blue and white dash line, or even better yet, the sideways range that we've come to grow our node in, so particularly that everything outside of it seems to be cascading away, and all of the concentration is spent within the two confines of the red zone and green zone. So that's basically the way I'd look at it in this environment to understand the value of being exposed to the red-yellow line break. Because we can't continue to do all of the other things without breaking it. We can't continue to use the white dash line. Can't continue to use the green and red zone. Can't continue to use the blue and white line by a little bit later, but still, I mean, that time is before the close. So, you know, that's very much pointing towards the idea that we will have to experience the break of that red-yellow line in order to maintain in any relationship with any one of the other predominant characteristics in the environment, basically. That's the way I see this range. And it's relatively new too. I put these ranges in today. And off of understanding that it didn't make the advancement the same way anymore and continued to make it even after the interest in the red yellow line is apparent. You know, it could be the case that breaking the trend with orders that you've provided in there, could be viewed as market manipulation and setting up for a squeeze through the trend break. They make it so that you don't have to pay for the trend break and the people do it instead. But I can't help but notice that they did buy up to where they were allowed, and that seems to be the white dash line again. Seemingly, that is an area where the robots seem to shut off. But what we are doing is we're running up on a W, and it's pausing at the point where people would usually short it. And if they get stopped out, they can pay for the trend break. It's a very risky place to trade the short. And it might just seem like a triangle to many, but it definitely has a lot more value on the other side of the white dash line. I think that the institutions will get in trouble if they pay for this break. They have to get other people to pay for it. And then they're getting it going, and they're being like, why don't you chase it? We're making it go. How come you can't chase through the break of the trend? Everybody's scared after what's happened to every other person that's went long. So it's like normal. The volume minimal. All of the blast that was part of any advancement out of every single consolidation that we've ever had today has been erased back to the baseline of the blast. And what this trend in particular was absolutely phenomenal for is making sure that there was no left B points. No untested B points. And it's not so bad. Because we see what it's like to leave B points. This run right here, it left this B point right here. And then it tried a little bit with that one. And it's just been very bad about running. Like this one right here was very much untested. This one right here was very much untested. And then they changed things with this one. Still came back to that B point again in the future. But one thing that's interesting about that is this medium line is getting increasingly more difficult to work with, because now it doesn't have a lot of time with the red yellow line, because being in this environment clearly hasn't focused energy on doing anything but staying at this one level. But soon it's going to have to make up its mind. Definitely can see that triangulation. By the end of the triangle, actually, you know what? I remember saying something about the other imbalance. Let's take a look at it. This is it right here. So looking at getting involved with the green zone, the arrow, and then imbalance could have something to do with it. No stops are safe above the arrow where that my cursor was pointing. The day ended. So we're faking out back into the tip of the triangle as well, and that's another major common thing for even the smallest of triangles, that we get fake outs of both sides, and the blue and white line is definitely getting a lot of usage as well. We have put a lot more spikes out the bottom of the red zone, or sorry, at the bottom of the green zone than we did out of the top of the red zone, so I think we're going to try and make that even by the end of it all. You know what we could see is a head and shoulders to an inverse head and shoulders. Like we've been, let's take a look at this last triangle. Like what's going on inside of it? I know it was making it even around the blue line and such, but what else was it doing? Well, it had a relationship with the gold bar, and this one sort of did as well, but not in the same way. For what it was support, this one seems to be resistant. Or sorry, this one was underneath, and this one's over top. Basically, this one's working as support, and this one it was resisting the price. So definitely a change there. Another negative response to the red yellow line, as I mentioned on the daily, doesn't change its value when broken. And the one thing I find intriguing about it is it can't manage to make same spike out of the other side anymore without breaking that red yellow line. The next time we break it, we're that much more likely to actually create a support out of it than to do this again and snap back on the lows. You can see that where we're snapping back to is a point that essentially doesn't have too much volume. Is it just another move out of the bottom of the triangle like we have been having? You know, in order to make this move even again in the future, it's going to have to break a lot more. But doing this allows it to have as much time as possible with both of those lines, as we do have the separation of those lines right here. And we will find out how important the blue and white one truly is. Because is the relationship so strong with the blue and white line that we have to break the red yellow to get back to it? Becomes a question. Another test of the medium line. Where a lot of emphasis has to be put on this level. So I say it's basically become the case that the red-yellow line will have to break if we are to ever see the white dash line again. First step in breaking it is getting to it. So basically like this is the understanding that I have of it. Is it's become the case that the red-yellow line will have to break if we are to ever see the white dash line again. The first step in breaking it is getting to it, filling the space between the price and the current trend. Change that. So if we're to see a head and shoulders to an inverse head and shoulders, could it be that we're interested in making a head? That is the next question. So I want to emphasize the larger triangles, smaller triangles. Essentially, in this trend, there's been one way that we'd move within it around this medium bar, and it's by making smaller and larger triangles, one after the other, it would seem. We've already seen this triangle once in here as well. So I question one thing. I'm like, well, in the event that it managed to fake out as much as the other one, would it be possible to manage to grab this level, like that level, to make it finally even? And I'm like, well, would that distance be enough? It's very intriguing to me. Falling wedge, the smaller one has always led to the larger one, don't forget. So it's intriguing that the large falling wedges have not produced as much as what the smaller ones can. The smaller one, it's prone to making upwards of 100% retracements or 88% retracements or more, and the big ones, we're lucky if we get the 61. The big ones, you get the 61 actually. That's what it is. It seems to be the 61 on the big ones. Yep. Okay, because basically this big one, right? It had a 61% retracement to this yellow dashed line, and then this big one right here had a 61% retracement right there. So they both had 61s, whereas the small one, its 61 is here. It pulled back nearly the whole way. And then this smaller one, if it has anything to do with this one, perhaps using the same fake out distance could be necessary. But I actually I don't think it's too necessary. But it would be the same if it did manage to do that. Now I'll tell you one thing. It managed to do that perhaps because it was under the gold bar. Now with it above the gold bar, we can see it's been used in every way differently than how it was used. Because it was used as support in our current triangle and resistance originally, where its intention is to have a relationship with the break of the red yellow line. I cannot help but notice that even on the last triangle itself, the first thing it decided to do was make a move out of the bottom and then make a move out of the top, very similarly to what we are doing right now. So it's like it's one of those things where it's like, if it's doing something that's so similar so often, how many other similarities are there? We can either choose to accept them or neglect them, kind of thing. And trying to find them is huge, because you might find that it's a lot more common than you think it is, basically. And it's remarkable how similar that when it makes a triangle, it likes to use the same angles, the same time, the same confinement area. Yep, that's another liquidation. Many are just sellers in that range.
Off of 188, 200 to that M. Yeah, short term.
Yeah, it's interesting how it doesn't show any buyers there, yet it did move off of that level. The dark pools. The public's retail information shows that the public was selling, you know, and continue to sell. And it's like when there's so much space, typically the slower it is, the more likely that they're actually trying to get more people built up at one level. So it's like how we've been making these. Low with a secondary low, then a bigger secondary low, then we're good to go. But like right now we're in something that basically is completely overlooked, and it's like this kind of environment where it did come down and come all the way back up and made a new low, but everyone will just see it as this one. But in this case it did it too. Like it literally came down and then made a new high here and then came down there and then all the way back up and then down again. Because that was a high right there that it managed to get, and these are two lows between them. And it's very similar to what we're doing right now. And they're only doing it because it works. That's the idea. So it's interesting. A lot more emphasis put on the downtrend because it's predominant in relation to like more so than any other trend in the area that since we started moving off of the red yellow line. It's one of those moves where if it was to get to the 261, the 61 would be the B point, I think. Curious about that. Yeah, exactly on the nose. Interesting. In the event that it made it down to the 261, this B point would get hit. And it missed it by that much. And look at the gap that it left there. And we go all the way along. That's the 261. Definitely intrigued by that. 261 lines up right on that B point right there. The amount of movement that the falling wedge played out to the downside in relation to how much it did before, somewhat similar. But Chelsea. This is like it just got back to the baseline, just to the back to the volume node here. But didn't quite make it to this distance still, which is kind of intriguing because the distance that it's made on top of the blue and white line was very particular every other time except for this one. It's been anything but easy to make that distance. What's intriguing about that distance is, in the event that we can get the B point down below, the same distance could be replicated on the other side of the blue and white line, except that time the entire trend will have to be broken in order to do that. And its interest in coming back to the blue and white line may disappear with the break of the trend. Because it was a way that we, have and play while we're in this trend. And, if the trend changes, so can that characteristic. So in many regards, it's not too far off what we did on the other triangle. But what we did on the other triangle, it was only similar in size. And the fact that it happened out of a spike from the bottom than the top of the channel. Like I mentioned when we were in there, there was a little bit of a spike out of the bottom, then a little bit of a spike out of the top, and it replicated that here. And then shortly after that spike, what we had was the circle, the play out, the distance, roughly this much distance. Save the wicks and spikes.
On the top of the hour now.
True. anti the public. Like, oh yeah, sorry. That old time that basically was the hourly. You know, we can see how much it was actually associated with using that range, and you could see it was inside of the consolidation at the very, very lowest point. But then inside of that range, the awareness of this gray zone was also on the table. So the break of the red yellow line amounted to it being able to play out to that gray zone. And that's it. Which I didn't even intend for this chart to be pulled up, but hold on a sec. I have to restart it. think I have. Yeah, I should use that more, you know. I can actually make different analysis on the same index. I don't actually have to use these ones. But I find it more difficult to actually switch between them than it is just to use the one profile thing. The relationship with this yellow line is coming to an end and be readjusted. And it's roughly the same distance and size and everything that it did before, out of the bottom of that range. So imbalance can be marked as well. It could involve a chop up to it.
I don't think your stream's on, John.
Oh. The gold bar doesn't end. Neither does the blue one. Just the price will eventually make it through it. Same confinement area. Close to it. What it's been using. Full distance of the move out of the bottom almost. Of the first triangle of similar size. Remember the B point is on top of a 261. We take a fib from this low to this high, we can see a 261 is right on top of the B point. We're at a 241 right now. There used to be a gap in that gray zone right there. Of course, that entire range is a large area that was capable of moving like this. Controversial point, that's for sure. An imbalance not too far away. Still patterns could be made. You know, the question becomes, even in the event that we break the trend from here, is it powerful enough to get not only to the red-yellow line, but through it? And of course, now that when we get through the red-yellow line, very likely that we'll have to deal with the blue and white one, because it's not something that's holding us back anymore. It's not something that we're going to run back into, and it's going to slow us down before going for the trend break. It's never going to do that again, because soon, well, no, I couldn't say never unless it hits it before this point. But if it hits it after this point, I mean, it's impossible for it to get to the red-yellow line before the blue one. So anytime before here, the blue and white line could work as something that could work against our ability to break the red-yellow line. But that will not be the case anymore by this time, which is a mathematical fact. So I do consider it. Everything's been bought back up to the 188.200 as well. So it is true that we're breaking the yellow line and retesting it. Its association with that medium bar is clear. Everything that's ever come off of it's come back to it as swiftly as it left it. Interesting to see if it's going to be used as support. a typical sideways chop at the imbalance. Now it's got something. It's definitely insinuating it's going to be finished. Like the yellow line is going to be pretty much over by the time the imbalance gets here if we spend, you know, more time at this level. So curious to see we can break the confines of this node that we're in right now. And to have missed the B point by that gap again is quite strange because it was ever so small, that gap.
Maybe I want to get up to POC for close.
Yeah, that's pretty much the white dash line there.
candles down here. Green ones.
Yeah, no, I do think that the ultimatum's coming to the table here, where we essentially have still the same distance below the last falling wedge that we did this one, and it's really putting that work in, trying to get through the yellow bar. When we do, the imbalance might bring us back to this B point right here, the other side of the gap, basically. And for now, getting to that other side of the gap would be within the red-yellow line, where technically, if we run up to it, it could come down all the way to actually bounce off of the 188 200. So we're almost at the break of the yellow line, and imbalance is coming up. The blue line's almost out of the way as well, and we've come back to test the 200 yet again from the underside.
Tesla set to report earnings after the bell.
Take a look at them.
That's going to move the market.
Giant triangle.
Like an M to me happening.
Yeah. Yeah, it looks like it to me too.
It's supposed to be ready to close.
Yeah, that's gonna make things move then. About hit that B point on the bottom there too as well. So the B point is cleared from way back. 261 getting traded back up to from the underside. That's a 261 that's related to this move. 5 minutes till the imbalance. May not just be Tesla. Yeah, Netflix is reporting before Tesla.
Okay. So earnings this week.
Tesla's at 405. Earnings for Netflix is at 4.
Earnings week this week. Gotta look into that.
Yeah, there is a bunch coming out. Not so much tomorrow, but yeah, got like, yeah, Apple's still like 2 weeks away. Amazon as well. Yeah, 2 weeks from now is gonna be the real earnings. Tomorrow there's a AT&T. Very close to having made the same spike out of the top that it made out of the bottom. Almost at the green zone to the red zone that we have there as well. Netflix being the first one to come out. I can see Netflix has an untested B point in the short term. The imbalance. Watch for it to lead to a spike as well. Back to the blue line. in the gold bar. The initial movement on Tesla may be bullish, but ultimately I think it's going to go down. Netflix, I think, is going to go up. Ultimately, what they do after hours is, they could take back the majority of the move that they give on the report. It's clearly that anybody that has exposure to these earnings has to have already been in, or has to have caught this specific low in order to make it comfortable. And yet again, it comes down to the imbalance. No stops are safe on Netflix above this point. That's basically that point. It's that situation where, the market doesn't have that same kind of idea. It's just a little bit similar, but ultimately we're seeing it progress into its D point and the market progress into its gold bar. Pretty hefty selling pressure on Netflix there. Like I mentioned, no stop safe above that point on Netflix. Curious to see how they're moving. Tesla falling off, market's not caring. Same with Netflix, the market doesn't care. Woohoo! Netflix went up through the roof. Anybody not bought Netflix? Making a bunch of money. Instantly sucked back down. They're going up. Netflix goes up. That's what it was supposed to do. Nasdaq following in its wake. Watch out for that level. I'm gonna alert when that hits on Netflix. It's a matter of when. Tesla felt it. It looked like the blue line on the Nasdaq as well. About to grab it right now. Orders that it put there will be filled. Tesla's anticipation move not really being too friendly. Report 1 minute away. It's made a B point, short term. $361, $300. Coming back to the 261 area. I like it. This area right here. It's already back in it right now. Crushing it. Beautiful. That's where you would take profit right there. And then let the rest rip for the earnings. Stop and profit. Not into the candle though at the extreme. Reports releasing. Another push through the break of the red yellow line on the Nasdaq. White dash line. It's an excuse to get back to the white dash line. See how the report is. No movement so far. Anticipation was down obviously, but they're usually wrong. Shall see. All stops should be made safe. They're about to kick it. Want to see that return to the blue line. Get in there, Tesla. There she goes. Beautiful move. Not even anything yet compared to what they're gonna do when they get through that yellow line. There's all the targets I have placed though. Let's check Netflix. Didn't quite make it down to that B point yet, but they're in danger of doing it after hours. Major thing is exposure to the red yellow line break is in line with Tesla breaking its trend right now as well. They can both maneuver into the same spot so they can do it at the same time. Trying to avoid too much selling pressure at the B point and the blue and white line. Pushing it through it is going to be easier if we've slowed a little bit down and then we can push through it all at once together. And it's like they've been buying back up to the white dash line all day. They're absolutely confident. They have complete control of the situation. They just don't want anyone else to be in there. And this is probably one of the best ways to move it if you wanted to make that clear. And everyone will wonder why the difficult time was all bought back up by the end of it all. Because it was only difficult for them, not for the people that buy everything. The people that buy everything, they wish they could get more people to sell it lower. The node again. Yeah, the fibs might not be as important anymore, but the blue line I think will. Like a fourth wave kind of deal. Netflix could be trying to grab its B point as well. No, not yet. They're at the 188 now. To its B point. We can see we came back up to that blue line on Tesla. Exactly as it should. You can trade stocks all day long, except they're not as consistent as the markets and its movements. You know, the liquidity can dry up and it can go really sideways, and it's harder for the market to do that. And everything is trying to break. Nasdaq will catch up in a moment. Some sideways chop is okay. Between the yellow and the blue, I mean, it is a range after all. It's respecting the confines of it, because that's the appropriate range that it chose to use as of now. That's the interesting part. It's the one I put in. And it's like a fifth wave now. So like I was talking about how we were on a fourth wave. We did 1, 2, 3, 4, and 5. The fifth wave does not have to reverse. It can come down a little bit, maybe make a third drive. It can play out to the first of the three, but then it goes up. Kind of already has that. You know, played out a third drive and did 1, 2, 3, and then came back to the first of the 3. I guess it's very I don't know, tough. But anybody that's short on the 5th wave is getting railed right now. So that's the reality of it. Everything's been purchased up by our friends on Wall Street that have complete control of the situation, guaranteed. So it's doing it again. It's like for the people that didn't notice the third drive the first time, they made it clear that the third drive brought it back to the first of the 3, but that's it. So if anybody could catch the half a millisecond of a pop that it spent up there back to this point, it was nice and friendly about sitting there for quite some time. But then, you know, it just showed us that that's all it gave, the first of the 3. That's interesting. In about 2 minutes, majority of the public that trades options will not be able to participate in QQQ options after hours and such. So with them finally being out of the way, losing all chances of being able to get out of be in the way, it's intriguing to me to see what they'll choose to do with the next couple minutes. Because if they choose to move it on the instant moment that the public isn't available to trade or make decisions, that would be interesting to me. If they made that minute the trend break, it would be like they're trying to show everyone that they're in control. Because it would be a trend break that's contrary to popular belief too. The steepness of this trend would insinuate that it's ready to break, but not breaking would be in favor of the position of the people that built this area and built this back to the trend line. Everybody that was associated with that dip bought back out. The tough time, which is interesting. Now we're about to switch to that minute where it's leading them on with a little bit of, oh, maybe the trend's breaking on the minute that you can't trade anymore. And then see what it does here. It's been anti-volatility for the past little while, and I would suspect that it's that minute change that they were waiting for. And now it's like before. It's like when I was saying this is the move of the individuals. You know, it's their turn to make a move. You know, their chance to make an impact at this level, and this is what we get. So next move, institutions move, and it's likely going to involve the white dash line. But it is after hours, and all the earnings have come to an end. We can take a look at Netflix one more time. They're just grinding that 188.200, and the SPY, it made a spike as well. The Dow did the same thing. Interesting. Well, I'll keep an eye on it after hours, and I'll keep you guys posted. I don't want to keep you too long, so we'll keep an eye on that white dash line overnight and the break of the red yellow line and so on. But hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, anytime. Take it easy.
Take care, guys.
Have a good one.